Good day and thank you. I'm happy to share with you today our Q3 2013 results for the period ending September 30th, 2013. We had planned to commence these investor relations briefings with our year-end 2013 results due out in late April. However, I thought I'd take this opportunity at this time to communicate those results that we are able to share. We'll be doing quarterly briefings going forward to provide our current and potential shareholders with the results and plans. So today, allow me to talk about our results for the third quarter of 2013. First, some key metrics. We achieved an operating ROE of 4.73% for Q3 2013. Our expense ratio stabilized at 24% of earned premiums, and our combined ratio is a favorable 85%. ICBL continues to demonstrate focus and strength in the face of challenging economic conditions in 2013 and a highly competitive market. We're continuing to make substantial operating and strategic changes and investments to ensure that we have an effective and efficient operations, focused growth, and profitability. Due to our continued significant strategic investments in technology to build a foundation to provide competitive products and enhanced services for our customers, our financial results were down for the first 9 months. ICBL recorded net income for the first 9 months, period ending September 30, 2013, of $4.98 million, down $3.90 million from the same period last year. ROE for this period was 4.73%, down 3.71% for the same period last year. We continue to grow across all our lines of businesses, demonstrating the competitive advantage of our diverse product mix and customer service offerings. We continue to achieve positive operating results with top-line growth in premium revenue of $9.4 million. Gross premium written was $91.8 million compared to $82.4 million in 2012, representing an 11.46% increase over the previous year. The life insurance division also experienced significant growth, with new business sales increasing by 38%. During the first 9 months of 2013, ICBL paid out $29.48 million in home, auto, life, health, and other claims and benefits to our Barbados policyholders. Our strong performance allows us to continue to build capital to keep our promises to our policyholders and continue to provide positive returns for our shareholders. ICBL's balance sheet remains strong, with capital reserves of $140.24 million at September 30, 2013. Our net underwriting income was $20.49 million compared to $19.48 million for the corresponding period in 2012, representing an increase of approximately 5%. Financial assets were $250.42 million compared to $244.6 million in 2012. $88 million of those assets supported our pension funds under management. The investment income derived from non-pension fund investments was $7.08 million compared to $6.95 million in the previous year. Our management expenses increased by $4.4 million over the corresponding period in the previous year. During the year, we undertook several new initiatives, which included the rebranding of our company, repricing of our products, including costs for actuarial consulting, and new hires in our life division to facilitate the transition from a totally manual environment to automated processes. A broker unit was also established to enhance the level of services offered to our brokers. In addition, we increased the visibility of the company in the market and significantly increased our advertising efforts to achieve this objective. Significant sums were spent on the training of our staff and the use of consultants to improve our customer service, performance, and image, and by all reports, this has been a successful venture. It must be highlighted that many of these additional costs are not expected to reoccur in 2014, and others will be reduced with the implementation of new systems throughout the year. We continue to experience business challenges as we work to attain our goals and objectives. Some of these are attempting to grow the business in a sluggish economy with limited diversification opportunities, outdated and in some cases non-existing technology, manual operations in administration and sales with a lack of web solution offerings, aggressive and at times predatory action from competitors. Results from the broker channel have been promising, and we continue to work closely with this channel to develop new business, new markets, and collaborate on the retention of existing businesses. The Life division is nearing the completion of the building blocks on which to launch major growth of the new business. Our new products, sales channels, and new systems for illustration, compensation, policy admin, and group health claims are all at or nearing completion of the current phases, and we will now be able to begin to capitalize on these strategic investments and cost savings opportunities. We continue to seek new and revised reinsurance structures to protect the business from major losses and to seek more cost-effective and profitable designs. Some of these will lead to the capability of taking on more or different business than in prior times. The new ICBL brand was launched in August, and a new social media campaign was developed to support the new brand launch. The new brand was launched in a creative way to enhance the public awareness of ICBL and have assisted us in our quest for increased gross revenue. We expect that we will maintain our growth rate. In personal property, the current economic conditions will continue and will make it more difficult to increase our gross revenue. Due to the severe competition here in Barbados, we see a pressure on rates and likely a stabilization or reduction in rates for motor, which may have an impact on our profitability. In commercial lines, again, the continued economic conditions will put a strain on rates as well, which will affect our profitability. We continue to do an excellent job in claims handling and management, which should lead to improvements in combined ratio in the latter part of 2013 and into 2014. Some of the infrastructure and operational improvements will also assist with the reduction on our dependencies on manual intervention from a policy administration perspective and in time reduce our unit cost. In our Life division, we've embarked on the repricing of our individual life portfolio to ensure we're meeting our profitability targets and implementing new technologies to enable us to reduce our unit costs in the next 12 to 18 months. We are well positioned to improve our performance due to our approach with our pricing, marketing, underwriting discipline, claims management capabilities, prudent investment and capital management practices, and a solid financial position. Given these attributes, we believe that they will assist us in improving the returns to improve shareholder value. Thank you, and I look forward to our next shareholder briefing in late April.